Welcome, everyone. My guest today is Sonu Mittal, Senior Vice President and Head of Single Family Acquisitions at Freddie Mac, to talk about affordability, repurchases, the cost to originate, and more. Sonu, welcome back to the podcast.
Thank you, Sarah, for having me on this podcast again.
Yeah, no, I'm so glad. We talked last time at an MBA conference, and now I think, you've passed the 1-year anniversary at Freddie Mac, correct?
You're right. Coming up almost 15 months.
Oh my gosh, I know that has to be a crazy ride. So I'd love to jump in here and kind of talk about some of the things that you're really passionate, what you guys are doing at Freddie Mac. So let's jump in and talk about affordability.
Yeah. So Sarah, first of all, thank you again for having me on this podcast. As I had mentioned to you last time, I bring a very unique perspective, being, on the primary side for 20 plus years. So really truly understand and appreciate the challenges and opportunities which exist in our industry. And I also joined at a challenging time for the industry when you think about with the macroeconomic factors and what was going on with the mortgage rates, and we were making a pivot from a heavy refi market to a purchase market. I'm pleased to share, how we ended when I reflect back on last 12 months or so. When we look at all the loans we purchased at Freddie Mac, more than 50% plus of the borrowers were first-time home buyers. We continue to make great progress on our equity plans, serving the underserved communities. And we also have made progress on reaching and helping qualify borrowers who have thin credit files. So when I think about affordability, it's a challenge which we all know, given the higher interest rates and the limited supply in the marketplace. What can we do at Freddie Mac to assist with this? And there are 3 things I would like to call out. Number 1, assist with down payment. Number 2, invest in technology. And number 3, educate consumers. When I think about the down payment assistance, you may remember last fall we rolled out DPA1, Down Payment Assistance 1 tool, which helps lenders and loan officers help the borrowers match them with a local down payment assistance program which may be available for them. Excited to share, we've helped over 4,000 lenders have taken advantage of our DPA1 tool already, and we remain on track to deliver the tool and make it available in most of the country by end of this year. The other piece within down payment assistance, I would say, is we also expanded our incentive on our Borrow Smart product for very low income purchase borrowers to $2,500 earlier this year. And when we think about the other piece within affordability we talk about is special purpose credit programs, SPCPs. We continue to make steady progress on those. We launched those in fall of 2022, and we nearly bought 10,000 loans under this program, and most of these loans help families of color. So those are, so that's one of the pieces under down payment. When you think about investing in technology, as I alluded to earlier, we continue to think about how we can help borrowers with thin credit files, how we can also we delivered on a couple enhancements to our loan product advisor to help lenders qualify more borrowers. We announced later this year we are looking to bring trended credit data to the market as well. And we continue to make progress on this is on top of the capabilities which we already have. Either it's leveraging the bank data to verify income assets, or leveraging pay stubs to assess income, or leveraging cash flow and on-time rent payments. So continuing to invest in technology. The last but not least, the piece around educating the consumers, we launched our Credit Smart curriculum in Spanish, which was a big step for us to create more empowerment, financial empowerment for homeowners. And also we continue to partner with borrower help centers to provide, which are mostly located in low to moderate income areas, to help borrowers to see the path to becoming a homeowner. So a lot going on, but those are just few things I thought I would share with you.
No, so much there. So I'm gonna dig into a couple of those things so that we get some more detail because there is so much. On the DPA one, the thing that really strikes me is that there it was just such a fragmented, group of programs across the country. There's all these different kinds of down payment assistance programs, but there was no standardization. So I think it's interesting that the approach that you guys took was really sort of empowering all the things that were already there. And it's like, how do we make it easier for lenders to really use these programs?
Yeah, I think couldn't agree more. Our goal, as you know, is to continue to provide standards to the industry where it makes sense. And this is one of those, where not only thinking about new ways of down payment, but this was really an effort to make sure the down payment assistance programs which already exist in the marketplace, are they being leveraged? Are they being adopted? And also, a lot of borrowers or loan officers are not aware that you could actually even have borrower get assistance with more than one down payment assistance program. So really just making sure, looking at all the state and local levels, what are the different programs which could be available to one. It was great work by the team, and we are happy with the progress and the feedback we received, and we continue to enhance the tool based on the feedback we received so far.
I love it that, instead of starting something completely new, it's like, let's superpower all the things that are already out there. So, kudos for that. Let's talk, you talked about credit a couple of times, just now. And I think that is something that people are really struggling with. If you are a homeowner already, generally speaking, you've got great credit, right? And now you have this fixed debt, product, right? You've got a mortgage that maybe you're sitting on that's like 3%, maybe even less, 4%. I mean, homeowners look really good on paper, but if you are that first time home buyer coming into the thing, credit is one of those things that's just so tough. So can you give us more detail and more information on what you guys are doing specifically on credit?
Yes. So, as I alluded earlier, when you think about, creating new homeowners, it's also important that we do that in a safe and sound manner and do it in a sustainable way. So when you look at, as I was sharing earlier, is more than 50% of the loans, we've purchased are first-time home buyers, and all the work we are doing around either it's the on-time rent payments, or either it's the cash flow, or either it's sourcing, the bank data, partnering with the lenders on doing this, and as I said, also bringing the trended credit data. All those allow us to create more homeowners responsibly from credit perspectives. So that really continues to be our focus, is how we do that. And when you look at from product standpoint, we have Home Possible, which is our flagship affordable product, which allows someone to become a homeowner by putting 3% down. So we continue to, last year, example, we bought 96,000 of Home Possible mortgages, and the great piece within that is 75% of those loans assisted low income to very low income borrowers. So we continue to look at not only just credit, but also products and offerings which we have, how we can do our part in the industry.
So that last part about affordability, you mentioned consumer education. So I think that's really interesting because I think of like what you're talking about, like being in the community and going straight to consumers. I think of that as being like a bank's responsibility or a lender's responsibility, especially if they're in certain communities. So how does Freddie Mac think about that?
I think, again, our goal from consumer education, when I think about it, is, I mentioned about our Credit Smart curriculum that we just launched it in Spanish. What we are looking to do is how we can provide that level of training modules and support to the lenders, and partner with them on those dimensions. So we have a team of affordable lending managers, who partner with sellers across the country and go and help the lenders, train the borrowers on what it means to become a homeowner, or provide them the content which they can leverage to continue to educate consumers in the marketplace. So when I talk about consumer education, we are doing that a lot through partnering with the sellers across the country.
So, another thing, if you are already a homeowner, right, we talked again about, you're sitting pretty right there. You've got so much equity, generally speaking, depending on where you are. And, helping people tap some of that equity to maybe take care of their consumer debt, to do renovations, to do some other things. What is Freddie doing to really help consumers who already own a home?
Yeah, I think so. Great question, Sarah. As you may have noticed, that we put the second liens, closed-end second liens product, which was put out by FHFA for public comment. And the rationale behind that product from Freddie Mac perspective is mainly when you think about the lock-in effect, which most of the country, so 6 out of 10 borrowers or homeowners are enjoying, the mortgage rates below 4%, and have also accumulated good amount of equity over last 3 to 5 years. So if they're looking to extract that equity out of their house, how can they do that responsibly, and not have to give up their low mortgage rate on the full mortgage? Because if they do a cash out refinance, that's what's going to end up happening, is they're going to end up giving up that sub 4% rate on the whole balance. What we are looking to do here is provide an alternative to borrowers, who are looking to extract equity without giving up their low mortgage rate. When we look at all the data which is available to us, is that there is an opportunity to provide more liquidity to the market with this product. And there's also opportunity to create more standardization in the market with this product. This product is specifically designed in instances where we already own the first lien. So the first lien has to be owned by Freddie Mac. So really just continuing to think about, when you think about our mission and our focus on reducing cost for the borrowers, this kind of intersects with both of those, is how we can help borrowers extract equity for any of their critical needs in an economically efficient way. And it will be case by case, right? In some cases, cash out refi may still make sense, but that's really was our thought process. And as you know, it's pending FHFA approval after the public comment.
That makes sense. What kind of reaction do you get from lenders when you offer these kind of things and kind of partner with them to help educate the homeowners?
The feedback is extremely positive, and they see that that we are bringing more things to the table than just bringing the liquidity, stability, and affordability to the marketplace. That we are continuing to think about how we could be their partner of choice in more ways than just when they already have a homeowner, or when they've already have a borrower who's becoming a homeowner, and just look at us as just to deliver the loan, as I said, for liquidity and stability purposes.
I like that when you think about a larger role for Freddie, than maybe people think about traditionally. Let's talk about, so we've talked about affordability for homeowners, but what about like cost to originate for lenders, right? So if we think about the way that it has just ballooned over the last 10 years, but especially maybe the last, say, 6 or 7 years, it's surprising how much it costs to originate a mortgage, considering some of the tech tools we have at hand, right, that people could do. When you think about how Freddie can make a difference there, what are you guys doing?
Yeah, so Sarah, great question, and another one which is top of mind for everyone. And given my experience, I've experienced it now from the both sides, right? And you're right, the cost to originate continues to increase over the last 3 years. It's increased another $3,000 plus dollars per loan, and that's not sustainable in some ways. So we just also conducted a study which lays out that by leveraging our tools. So when you think about Loan Product Advisor within our automated underwriting system, we have tools like Asset and Income Modeler, or our appraisal waiver product called ACE, or we have Condo Project Advisor, which helps lenders qualify their condo projects and reduce the cost for them, on that front. When you leverage our tools, which is something I would just encourage, folks who are listening, to really look into. When you leverage our tools, you see 14% reduction in cost, which means you can enjoy higher margins. And also, we see shorter cycle time. The speed to get the loan from application to funding also is 5+ days shorter. So when you think about leveraging our tools is going to help a lender not only be more efficient from cost perspective, but also it's going to be shorter cycle time for them, which will allow them to pass in some ways some of those savings also to the borrower, while maintaining great manufacturing quality. So all in all, I would say our focus is how we can not only increase the adoption of our current tools, within Loan Product Advisor, and at the same time, as I alluded to earlier, continue to leverage data responsibly to enhance the number of borrowers or the eligible borrower population for those tools.
Last time we talked, repurchases were a huge topic of conversation, right, among lenders. And I feel like, we raised the issue. You guys were hearing it from lenders, all that stuff, and then you responded. So you have a repurchase alternative pilot. Would love to know how that's going.
Yeah, so Sarah, I still very clearly remember my first week at the job. I had my colleagues across the industry sending me loan level examples, sharing how much opportunities they all believed we had in this space, and I'm excited to share that in the spirit of being transparent and efficient, we've made tremendous progress on this front. So really, three things I'll call out is when you think about the non-acceptable quality rate, which is our indicator of how the manufacturing loan quality is being is coming in. It's great to see that we have 50% plus lower compared to what we saw in the peak of third quarter 2022, and that trend continues to sustain, which is the key piece. And I do want to give a huge thanks to the industry as well, the lenders, because it wouldn't have happened just by us taking actions within Freddie Mac. We needed the industry to continue to make progress on making loan quality a priority as well. The second thing I'll call out is on the repurchase notices issued. Same thing, we've seen 60% plus improvement from the peak in third quarter 2022, and that continues to sustain as well, which is great to see. And as regards to the repurchase pilot, which you talked about, one, it came purely based on the lot of the feedback we received from the industry, and we took that feedback very seriously, and we designed the initiative, and we have 14 sellers in the pilot. The pilot kicked off earlier this year, and we are still early in the pilot, but we are continuing to see the right signs in the pilot, and we have the approval from FHFA to continue the pilot for 1 year. So as we continue to accumulate more data about the pilot, we'll be sharing that with the industry, and also and collaborate with FHFA on next steps.
I think seeing that quick action is just really encouraging, right, for lenders to feel like they were heard and their pain was felt, and then there was action that was taken. So we've heard from a lot of lenders that that their repurchase risk has gone down, that they appreciate having this alternative, and just the fact that they were heard and action was taken. That's what we've heard. So kudos on that. So we are about to be at MBA Secondary. I'll be up there. You're going to be speaking. Can't wait to go and listen. So maybe you can give us a preview of what you're going to be talking about.
Yeah, no, really looking forward, to another great event. MBA does a great job organizing these events, and my messaging there is going to be, some of the things which we just talked about, but two things, and especially I want to convey at the event is one, we want the lenders and the industry feedback, and As I said, we take the feedback seriously. As we just touched on, the repurchase pilot is a direct result of the feedback we receive from the industry. So we want the feedback from the industry. We are listening, we are adjusting our approach and prioritizing our roadmap based on that, where it makes sense. And number two, I'm looking to really convey that, please utilize our tools. Please make sure you are, unlocking the full potential of LPA rather than, missing out on some of the efficiencies which I just called out, which one could gain, by leveraging, our tools. So really listening to the industry, and we want their feedback. And second, leverage what we already continue to deliver to the marketplace in the most efficient way.
Well, you call out the industry. I totally get that. But because you were on the other side, I think that's got to be really helpful in your new role, because you know what that industry is worried about, thinking about, challenged with, and what they're looking for.
Yeah, no, hey, we have a lot of great folks across the industry, and we appreciate their feedback. And Sarah, I also want to just thank you for all the great work you all do, and I appreciate you having me on the podcast.
Well, we appreciate you having you on. And of course, we will talk to you again soon and catch up on what's next with Freddie Mac. In the meantime, looking forward to seeing you at Secondary.
Same here. Take care, Sarah.